This is a critical moment for Palantir investors. If you're a current shareholder or you're looking to get into the stock, I believe we're going much higher based on a few reasons I'm about to share with you, but I'm going to show you my new strategy for getting into Palantir at a discount and getting in with half the capital requirement because I do believe we're going higher. So let's go ahead and dive into the video. But before we do, make sure to hit the like button if you get any value out of this video, and subscribe down below if you haven't already so you can see me turn my portfolio into $10 million and employ some of the same strategies along the way. Also, if you want my free options picks and stock plays in your inbox, go ahead and click the very first link in the description. That's going to be a link to Options Trading University, my newsletter, as well as if you have any questions, you can go ahead and message me on Instagram. It's Ryan Hildreth, or comment down below. I answer all DMs and comments, and I appreciate you being here. So remember, this is not financial advice. This is just me sharing exactly how I've built my wealth with options. And Palantir Technologies is currently trading at $66. Now, we made new all-time highs just yesterday, so we're about to potentially break out pretty soon here, and I don't want you to miss the boat. I know we're at a very steep price point on Palantir, but let's go ahead and talk about some of the fundamentals and some of the catalysts that might propel Palantir to $75, maybe upwards of $100 plus per share. Okay, so the very first thing I want to talk about is actually Palantir moving and relisting onto the NASDAQ exchange. This happened on the 26th of November. They listed on NASDAQ. They aren't inducted into the NASDAQ 100 yet, or QQQ, but this will help their eligibility requirements of getting into the NASDAQ 100, which would be another huge push for Palantir. We saw when they got inducted into the S&P 500, right? All the funds that buy the S&P 500 are required to purchase Palantir. So we saw a nice up move in the stock, and I believe we'll get an even bigger up move if they actually get inducted into the NASDAQ 100. I believe that will be a better move than the S&P 500. So that is coming up soon, potentially by the end of this year or early next year. Also, they just did a partnership with AWS, so Amazon, and Anthropic to provide AI models for the US government intelligence and defense operations. So that was a huge partnership with huge companies, and that's something we want to continue to see to increase their earnings and increase their revenues. So let's go ahead and dive into the fundamentals. As we could see, the PE ratio, so price to earnings ratio, this is something that I look at when I'm trading a stock. I don't want to trade a stock personally on a company I don't believe in because I'm more of a bull. I'm not really a bear. Obviously, if there's a bear market, I will switch my thesis and trade the trend, but I like to own stocks long-term and collect income via options, via put options, cash secured puts, and covered calls. So when I'm trading Palantir, I do believe in the company. I do believe in the growth, and I think it's going much higher. Now, their PE ratio as of Q3 in 2023 was 247. So you're paying back then 247 times what they actually earn per share, right? Right now, it's trading at 188. So this is good. We do want to see the PE ratio trending downwards because we don't want to pay too much, right, for their earnings. We don't want to have an expensive company where we're just continuously risking our capital on a company that's getting more and more overvalued and more expensive, right? So this is something good. And I really don't think 188 is very high for a high growth company like Palantir. And I'll show you a couple reasons why, okay? So let's dive into NVIDIA's PE ratio for the past 5 years. Obviously, NVIDIA is kind of a unicorn type company. Their earnings are amazing. So their PE ratios have been relatively low for the growth of the company. But there was times when NVIDIA was trading like last year at 220 times earnings. At the peak, it was like 247 times earnings based on the share price. So people were paying 247 times what NVIDIA actually earns just last year, right? And we're talking about a multi-trillion-dollar company where Palantir is worth, I believe, like 130 billion. They have their market cap. So This is not super high for me. I've seen much higher, and Amazon is kind of the best. I know Amazon is not a direct competitor with Palantir, but it's in the tech space. So I like to look at tech companies and their earnings and PE ratios. I remember when Amazon had negative PE ratios, meaning their PE ratio was 0 because they didn't earn anything. As you can see back in 2012, this is when I actually purchased my first share of Amazon. And I remember a couple financial advisors that I was shadowing under said like, oh, Amazon is overvalued. The PE is too high, or actually they didn't even have a PE. It was 0. They don't earn anything. Why would you, risk your money in a company like that? So as you can see, right, there has been times when Amazon PE ratio was over 1,000, right? Back in 2013. Back here, 830 in 2014. Just back in 2023, 245, right? So we're still very early on in Palantir, and I believe the earnings that they actually are doing and performing are very significant for such a newer company to the stock market, right? I know they've been around for a while, but they were, I believe, listed back in 2020. I wasn't investing in Palantir at the time. So this is what we like to see. Palantir, so let's talk about the stock and then kind of how we can get into the stock at a discount, or better yet, using my new strategy, I'm getting in at a discount and I'm also getting in with half the capital requirement, meaning if I purchase the shares, that's going to be more capital intensive versus what I'm about to show you. So Palantir has been pretty predictable as far as usually it just shoots up after earnings, consolidates for a while. I don't count August 5th because the whole market was down. But if you look, we kind of consolidated, pop back up, consolidated, pop up, consolidated, and just keeps doing this same pattern here. Barely any times did it touch the lower Bollinger Band. And these are those two bands right here. This is an indicator that I like to do because what it tells you is 95% of the time the stock is going to trade within those two Bollinger Bands. And usually when it touches the top, it kind of, retracts back down. When it touches the bottom, it usually bounces back up to this middle line, which is the mean price or the average price, right? So what we see right now is Palantir definitely got overextended right here. Was trading outside of that upper Bollinger Band, and it kind of worried me a little bit. I didn't want to just dive into the stock like everyone was doing. So I waited a little bit, and I'm glad I did. But at the same time, if I were to have gotten back here, I would have already been up. So that's why I said, you know what? I don't want to miss out on the stock. I do believe it's going higher from here in the long term. So what I'm going to do is deploy a specific strategy. Now, I believe we're consolidating right now. We're going to consolidate somewhere between this 66 level and maybe down here at 60. We may trend sideways for quite a while, maybe a month or two, maybe 3 months before we pop up to $75, $80, $85. So this is exactly what I'm doing, okay? And as you can see, it's trending toward, once that Bollinger Band kind of meets that price, meets the candlesticks, then I believe we're going upwards. And that could be, again, in the next month or two. Middle Bollinger Band might be at the exact price where it's trading now, and then it'll bounce up. So what I'm doing in my account, as you can see, this is my Palantir position. Portfolio is currently at 661K. Been trading sideways for the past week and a half. What I did here, okay, was instead of buying the shares, right, you're locking up all that capital. What I said was okay, let's look at the chart and see where kind of support is. This $60 level has support. So I'm fine owning the shares there. If the stock comes down to 60, I would like to get assigned at that price. So what I did was I sold 3 cash secured puts 30 days out at the 60 strike price, hoping to get assigned, okay? Now these, as you could see, I'm already up on these, but if we go to the options chain, let's just go 30 days out. This is what I would do, okay? And obviously you need the amount of cash to cover these puts if you do get assigned. So let's do the math there. So at $60 per share, okay, that's $6,000 per cash secured put, right? And I sold 3 of those So I need $18,000 to cover if I get assigned on the shares. That's one strategy, right? So I set aside about, 20K for owning shares just in case I do get assigned. If not, then I collect $500 in income for the month, which is great. I'll collect $500. Maybe I don't get assigned. But the problem with just doing cash secured puts, and this has happened to me because I've been selling cash secured puts on Palantir since it was trading at $27. So it would have been better just to own the shares. So I told myself, how do I get involved with Palantir without putting up a significant amount of capital, but also giving myself the most upside in participating in the stock? So what I did as well is I actually purchased some LEAPS options. So these are long equity anticipation securities. These are long expiration call options on Palantir. And as you could see, I went 750 days out. All right, I want to give myself enough time to be right, especially on a more volatile stock. On an index like QQQ, I do have some LEAPS options that are about a year out, and that's fine because I think QQQ will be pretty consistent with the returns. Palantir, it may consolidate for a very long time, and I want to make sure that I'm participating on the stock. So what I would do personally is what I did was I went out to this December 18th, 2026. So this expires in 2026, all right, at the end of 2026, right? So that's 2 years from now. And what I did was I went to the calls, and I went to the 70, well, actually, now it's the 80 delta, okay? I went to the 80 delta. I believe at the time it was like 75 delta. The reason I went higher on the delta, usually a LEAPS option, you would do a 70 delta, but you only get about a 7 to 1, right? If Palantir goes up by $1, you make 70 cents on the option. I wanted to get an additional 10 cents. So I went a little bit closer, right? So we have an 80 delta. And as the stock continues to move up, this option will go deeper in the money. And soon I'll be at like a 90 delta, right? Which means for every dollar Palantir moves up, I'll make 90 cents. So this is exactly how I did it. Went to the 45 strike. I saw that there was a decent amount of open interest here, okay? And I went ahead and purchased 5 contracts. And this was when, obviously I'm up about $434. This was when Palantir was trading at 64. So this happened like last week. What's pretty cool is I'm buying the option, which cost me $3,300, okay? But the stock would have cost me $6,600 right now if I were to purchase 100 shares. Right, so that would literally cost me double. It would require double the capital to just buy the shares outright. So what I'm essentially doing here is I'm using leverage, right? I'm getting to control 100 shares for half the price of 100 shares. And this is great, okay? Worst case scenario, we have to talk about risk here. We have to talk about what's the worst case. The worst case scenario is in 2 years, Palantir is trading at, let's just say $45, right? Or $44. So now my option expires worthless. I paid, what was the cost on this? I paid $15,900, let's just say $16,000, right? For the right to buy the shares at 45. So worst case scenario, I have the cash to actually cover these LEAPs. This is kind of a new strategy that I'm deploying, which is like a cash secured LEAP, meaning by expiration, worst case scenario, I'll just buy the shares at $45 because I believe that's a major discount, right, on Palantir if we are trading down there. But I do plan on closing these out within 300 to 450 days. I'm not going to hold these until the end. I'm going to take my profit and run with it. If they have a blowout earnings, one of the earnings that are up and coming, I might close all of them and just take my profit and run with it. So this is a strategy. The LEAPS options is to basically requires half the capital. So smaller accounts could benefit from this, and also bigger accounts too. If you don't want to use that capital to just purchase shares, you can go sell puts on safer stocks, right? And then just hold the LEAPS that are 2 years out. The reason I like these leaps too is because the theta decay is very low. As you can see, the theta decay is about $1 per day. Okay, that's fine. I'm fine paying $1 per day to wait for this thing to pop up. So that's exactly how I'm participating. I'm doing about half cash secured puts, collecting income, and potentially going to get a sign on the stock, which then I will sell covered calls about 20 delta, 15 to 20 delta. And then I'm also participating by purchasing leaps options. Now, I do not plan on covering these with a poor man's covered call. I don't trust it on this particular stock because Palantir could shoot up to 85 tomorrow. And we've seen it happen time and time again. So that is exactly why I'm not covering these. I want my upside to be unlimited, and I want to make sure I can make the most amount of money. So hopefully you enjoyed this video. Hopefully it gave you some perspective on how I'm participating in Palantir with less capital requirement, and also how I'm collecting income along the way on Palantir as it goes up. So if you enjoyed it, make sure to hit the like button, and I'll see you in the next one. Take care.